Hello everyone, my name is Sid and welcome back to our YouTube channel. Trigger rate. We will be talking about trigger rates in this video. In the last few months, we have all seen our monthly payments go up like crazy. And to talk about it today, we've got Shafina from Simpson mortgage team under the DLC umbrella. So welcome, Shafina.
Thank you, Sid.
Thank you. So Shafina, we've been hearing a lot about trigger rates and we've seen people getting concerned with how their monthly payments are going up. So what is this trigger rate?
So basically, we'll go down to the basics. When you have a mortgage, you have either fixed or variable. When people have variable mortgages, there's two types of variable, where one is a variable where if the prime rate increases, your variable payments increase automatically. And then the other type is where most banks are offering this, where you have a variable rate, but your monthly payments are static. So if prime increases, your monthly payments don't change, which is great.
Right.
However, that's where the trigger point and trigger rate comes in. We've had clients where we got that amazing rate like 2 years ago of 0.99% variable rates, and they're going through this whole like amazing ride because they're enjoying that low rate, low monthly payments. Now what happens is, as prime is increasing, your monthly payments are no longer covering your principal.
Right.
They're full on interest, right?
Right.
And maybe the next rate hike will be so much so that you won't even cover your interest.
Right. This
is the trigger rate.
I see.
This is where the bank will pull you up.
I'm sure. So is there a way to combat trigger rate?
They are. So a lot of clients right now probably have reached that rate already and have probably been contacted. So at that point, I think whatever the bank offers is the best option, right?
Right.
However, if you are in that, so for example, anybody who has had a variable rate mortgage after June of this year, you can still combat it because your trigger rate won't hit until like I think about 7 to 9%, right? So how you do it, you increase your monthly payment. So if you're normally paying $1,500 and you can afford to pay $2,000, increase it, because worst case scenario, you're paying more towards your principal. Right. The other option is to put a lump sum. Like you saved up over the years from saving all that monthly payments where you didn't have to change it according to prime. So put a lump sum down if you can. Right. And then the worst option is to change it to a fixed rate mortgage, right? And right now, fixed rate interest rates are quite high. Right. However, if you want to combat it and you don't have the ability to do the full down payment or the monthly increase, then it would be the right time to change it to a fixed rate. Again, it would be more individually, like it's very individualized. I would need to speak to you. We would need to discuss it, but talk to your bank or talk to your mortgage advisor. Right.
Wow, thanks, Shafina. That's great information. Thank you for sharing all of that. Guys, if in case you have more questions regarding your mortgage, please feel free to contact Shafina at the information given at the bottom of your screen. My name is Sid. I am your realtor in the region of Waterloo. Call me if you have any real estate questions. I will wait to hear from you. Thanks for watching.